You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live every week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome, everybody. Little background music there was kind of fading out as it was ending. Yeah, so trading smarter, not harder. We all need to do that. As always, how? How do you do it? Well, we got some basic principles on how to do it, which we're going to share with you. And today we're talking about W patterns, one of my favorite. And they can be traded with the trend. They could be traded counter trend. And counter trend, it is one of the best. I mean, it's just an overall good pattern. However, with a trend trade, like 1, 2, 3s are awesome. We did an MT live on those. And what's the difference? Well, we'll get into it. I don't want to give too much of the excitement away as we get into it, but this type of a pattern, we've been trading it, hard to say, decades. We're getting old, especially Dan, but he's got more hair than me. Anyway, jokes aside, every MT live is packed with great information, and this is going to be a great one too. And once you see some of the examples and understand why, when, how, you'll be able to start using it right after lunch. If you eat lunch, otherwise this afternoon. It's a great afternoon pattern. It's a great swing pattern. So whether you're a swing trader, an intermediate term trader, a day trader, a scalper, everything we talk about is universal to all time frames. And that is something that really says it's the truth. It's the truth because if it's applicable in all time frames and all instruments, it's something that you can use universally no matter what you trade. And that's a beautiful thing. So let's get to it.
Awesome. Good afternoon. Yeah, Greg, I was thinking also of last week's MT Live on the 1, 2, 3 continuations. I love saying we can teach little Johnny how to trade it in 5 minutes. And we're going to do the same thing with this. These are, we trade many patterns. Here I'll just jump to this and I'll come back. So we're technical based traders. We start with a compelling picture. These are just 9, just because I didn't want to clog up this sheet right here. But we trade many more than this. So we start with this and then we overlay our other concepts. So last week we did this bullish 1, 2, 3. Today we're going to be talking about W bottom. Obviously, these are all on the bullish side. They apply equally to the bearish side. And in fact, Greg, right at 11 o'clock, I said the Qs, spiders, and diamonds 15-minute charts are all M tops. And we can come back to that when we put on real charts. So it's the opposite of this. And that set up the dead high this morning. So yeah, these are two fabulous patterns. So this is where we start. Give me a compelling picture on the time frame you are trading. As Greg already told you, these pictures work on any time frame, 5-minute chart, weekly chart, whatever you're trading. And then we overlay our other concepts, which make up our total approach, and say, okay, now I got this compelling pattern. Where is it in the trend, up, down, or sideways? What are multiple time frames telling us in terms of the likelihood of this pattern on that time frame succeeding? Is it on support or resistance, this W bottom? Is it showing relative strength or weakness to the sector and the broader markets? We say these are secondary volume and moving average analysis. And we've been doing these MT lives, 6.5 years now. So we do them on very specific subjects. So every single one on this chart, obviously, we've done MT lives on and many more. what are the broader markets doing? Market internals help tell us when we're at extremes. We have different levels for swing trading or day trading that alert us in advance to, hey, pay attention for a turn. These two are key to anything you do: position and money management, trader psychology. I mean, we're running a business here. Greg always says we should put these two up top, and there's truth to that. So our approach is a systematic technical approach. Greg teaches all this in a swing trading course, including the position money management, trader psychology. So once you have an objective approach, there's 4 stages to learning. And where we all want to be is what they call unconscious competence. And so that means you're just immediately interpreting the information to come up with a conclusion. And it takes textbook knowledge as the starting point, and then seasoning is how you get to that. All right, so just a few words on here before we start looking at examples. So it's okay, so it's coming down. Greg mentioned, yes, these exist in all different trends, up, down, or sideways. Many, you're not going to see them as often in an uptrend. And the reason for that is because we're requiring this big momentum move down. And if it does that, unless the stock's extended, it's probably going to crack the prior pivot low. But just let's not get too complicated. Let's focus on this. And then you'll see, we got many examples, as we always do. We're going to take this beautiful picture and, we're going to focus for the most part on daily charts, a couple of 15-minute charts. And then we're just going to add our other concepts to this picture in terms of a bullish reversal.
Let me add a little to that, Dan, because
Sure.
what you're showing there, all of these MT lives are so packed with education, and it's only an hour, right? As opposed to a course that is much, much longer, and things could be explained in so much more detail. But I always really like to explain the patterns, the psychology behind the patterns, because it just drives home the point so much more than, like if you read a candlestick book and they say, oh, when it's 3 black crows, that's indicative of a turn. Really? Why do birds have anything to do with it? Why black? Anyway, the thing is to understand what's going on there is that when it's a counter trend trade, when prices are going down or up, they eventually move in a way that it gets extreme, meaning those that missed the boat or those that didn't adhere to their stop panic. So they're panicking to get out or they're panicking to get in. And it creates a pattern just like what's on that chart. It starts down, and sometimes it starts down slow, and then the wide range bar, the big bar, is at the bottom. We'll look at some examples. But after the climactic move happens and it exhausts, in this case, the supply, right? And clearly demand increased since the momentum slowed. And then it pops up and then it comes down again, and the W. So what the example here is displaying is that climactic movement of throwing in the towel, the throwing up, the end of the move. And we saw that in part. I think I showed it in a mid-market thing or whatever we looked at. I forget, whatever. I lose track day to day. But anyway, it showed that pattern. And as things were going down, I said, oh, it's like this is just going down too systematically. There's no panic, but the panic eventually came, and then I figured, okay, it's close to a low, and we got a W. the hell? I lost your voice, Dan.
Oh, yeah, my bad. Yeah, when I was typing. Yeah. So momentum move down, a retracement less than a third of the momentum move down, and then some type of bullish retest. We're going to show you many examples. I'm showing these poker guys here as a tail. That's what this sentence is talking about. We don't enter until we have confidence of some type of turn. And you're going to see, no, I don't have enough information. Yep, now I'm ready to go. But we'll get into that with the pictures. So this is a slide we talk about all the time, talking about turns. So if we go back to the slide with all the patterns, every one of those involves a turn before we enter. So this is a 1-bar turn, went down and went up. So I have a bottoming tail and some type of big, it could be a big green bar. 2-bar reversal, ugly red bar, and this is what we call a bull 180. Ugly down, fully negated. This is a derivative of that, but with an extra bar inside. But these are all reversals. This is also a reversal. Not 1, 2, 3 bar, but it's a W bottom reversal. So all reversals. Here's another fantastic slide I pulled right out of Greg's seminar. Let's focus on the bullish ones down here, because that's the opposite. So remember what I said, momentum move down, momentum move, retracement. So Greg just typed these out as 3 different flavors. There's going to be dozens of different ways that it can retrace and reverse. So this one, he's labeling a potent reversal. Here, I got a nice 180 potent reversal on support. What NL shock means is new low. So we call that a new low plus. Go back to Greg's psychology comment. The bears, depending if you're long or short, but this is bearish move. And it's typically a downtrend, as we said, although it could happen in any trends, which means it's lower lows and lower highs. So the bears are expecting a new low because it's a downtrend. It does make a new low. So the bears are happy. The bulls that bought in this retracement are now stopped out. And I got a 180 shock. So both, depending on what position you're already in, I'm going to focus just on a new trade opportunity. That's my point to enter over this reversal. This one, he's just, again, there's many flavors. Deep move into prior consolidation. So look at, I said a third move up, but this one was an aggressive move off the low. Now I have a retest. This one, this is an igniting wide range bar. Power. It's like this thing's gone down enough. I like this value. And I have a retest.
Go back to that 1 second. You know what? I'll try and hold my comments because we only have an hour, but where the hell did they put the drawing tool on this thing? Where the hell did it go? Oh, here's one here. Okay, so, all right. Those of you in the green room, we talk a lot of stuff. So I don't know if you remember or not, but 2 times in the last week or so, I pointed out to you, watch out for this pattern where it's a little consolidation and it breaks like that and an inside bar. I said, watch this thing try to reverse back up again. Now, you don't know how much it's going to reverse, but I showed you 2 times, and it's right here. I didn't know, I forgot it would be here. But anyway, that little pattern right there and reversal after the drop, it just gives you a heads up. If you're thinking about shorting, don't do it. The other thing to understand about the psychology of this, I already explained to you about this moving down as it accelerates lower. Think about it. Where do you typically, if you want to short something or get out of a long, what location on the chart do you want to do that? Generally speaking. Okay, it wouldn't take too many words to write that. One word, maybe. All right. No one wants to make a mistake, I guess. There's no tricks. Resistance. Where was there prior support in some way that it stabilized and then fell? Right? What was support becomes resistance. Yeah. So if after a mini climactic move, they are so aggressive to short it on such a shallow retracement, that's another indication that they're just too aggressive, no risk whatsoever. And then it makes the new low when it reverses. They're caught. They're caught. And the bigger picture of what we talk about as to what to look for, support, resistance, so on and so forth, sets up a reversal. Go ahead, Dan.
All right. Some people argue with me in the green room, but this is how we define it.
Kick them out, Dan.
What?
If they argue with you, kick them out.
Oh, okay. So many people say, oh, Dan, look at this. It's a W bottom. It's not a W bottom. This is a W bottom, little Johnny. So I call this a bullish reversal on major support, and 200 happens to be here too. So this is a climactic buy setup that we would trade, but we're not talking about climactic buy setups today. But I'm just telling you, a retest of major support is not a W bottom. W bottom is those pictures we just spent 10 minutes talking about. So for the rest of the time here, we're going to go as many examples as we can. We always save time around 12:45 to look at real charts. So here's my double bottom. Now I put this note in here just because I really want to emphasize this. So we got our momentum move down. Got our third retracement. Check. Got my retest. We want to enter on the W reversal. So that's this. As I said, when we're confident that we think this reversal is going to hold and we have a good reward to risk entry, we're willing to press the button, half lot, full lot, whatever the case. So I say, where are those points here? This is a potent wide range engulfing bar on major support. This is it's a weekly chart, it doesn't matter, but this is a longer first W. So buying over just one bar, I would do it. I would say take a half lot without a doubt. Stop under the low. Let's see what happens. So it went against us a little, but I'm still in it. Half lot here. So now let me ask everybody, answer this question. Where would be the no-brainer entry to add or new if you're not in it? Over the high of this red bar. Because now I have a red bar ignored. I have 1, 2, 3, 4, 5, 6, 7, 8 bar reversal on major support with a price void. So when we talk about momentum move down, that's why we love these patterns, is because this momentum move down is insignificant resistance. And you know what, Greg, we might I don't know why I never thought of this before, Greg. We might have to tweak the definition a little bit. This retracement here in the middle, we want to be a V top, not a big fat rounding top here, because this W pattern suggests that it's going to go through this prior high. So the more bars you have here, it's going to be resistance. Not to say it won't be tradable, but it's going to probably stall there and go sideways for a while before it gets its second wind and breaks out.
And think about the psychology. Could anybody imagine the psychology of the V versus the rounding? Kind of gets into a deeper discussion. You got to think about it, and we got a limited amount of time, so I'll just tell you. Every pattern means something about the participants. So if prices came off of the first low, and then started going sideways, that would tell us that traders have become more bullish even after such a decline. Now, that could be fine, right? Of course, it could be fine. But what does it mean? That it begins going sideways. They're more bullish. They're buying little dips. They're not waiting for the retest. So again, they're more aggressive. Now, if it starts to go back down, let me back up a second. The V means the ones that bought the low are selling aggressively. They're like, I got my money. Let me get the heck out of town here because this thing is a nasty chart. It's in a downtrend. So I'm happy to take my money and be done. Perfect. They're still scared. Whereas the rounding top, they were buying it and it failed. Now it's left a larger area of overhead supply, resistance up there. Theoretically, it's going to be more difficult to get to. So that would lead into a very deeper discussion about money management and position management, how to handle that. But just understand that rounding top versus V top has specific indications as to what the participants have done and what they've experienced.
All right. Now, Greg has a saying, same but different. So I think we're probably at that stage right now for the next of the examples. And that's why we said we're going to teach you this amazing pattern in a very short time frame. So, this thing exploded. There's other bullish patterns, we could have done there, but that's not today's subject. So we got our momentum moved down, came down sloppy, ugly, got its sea legs back. There's my retracement up. Here's my retracement down. Remember this question I asked you? Not to say that the first reversal, that's this one here, is not tradable for a bounce. But why is the W reversal pattern more reliable than trading the first one? That's a very simple question. Because I have a retest of demand on this level. But the second question, remember I said every single time I want you to ask yourself, where do you feel confident of this turn? So this arrow is pointing to the big bar. Sometime during the day, we might have bought a 30-minute high as that bar was growing, but over the high of that bar, stop under the low, I have total confidence. But here's the point I wanted to make. Go back one bar. Would I buy over the high of this bar based on everything we've talked about in 27 minutes? So, Alex, I don't know if you're here too, because I know you and I have been talking about double bottoms a lot in the green room. Would I buy over this bar? The answer is no. And why? Why? Go back to the slide where we gave you the 3 stick figures. The answer is I don't have a confident reversal yet. That's one tiny little doji bar. I have no confidence that this is going to hold. Again, beyond today's subject, we have a whole MT live on potent reversals. What if I got a gap down and then a bottoming tail? What if I had a gap down and then an engulfing bar? Those are potent reversals. Okay. So this is a closed trade. This is we track everything for subscribers. We started with a half lot, added on a pullback, wide range bar from a large W bottom. We give the technical setup for everything we do. The sector was strong. We sold into strength here a little bit, 1/3 for 28% return. All right, take it away. And we made, wow, 38% here total.
I'm answering John's question as to the amount of time between the bottoms. I said they have to be relatively close. I've tried to define for everybody over the years, well, how many bars is that? And it happens in different ways. So there's no definitive answer as to the number of bars. So it's a visual thing. But one of the things I can assure you is that W bottoms do not happen after prices rip or move that far away from a consolidation and then come all the way back again. That doesn't mean buyers won't be there. They will, but it's not defining a W bottom. So that other slide that Dan showed, it was like, this is not a W bottom. I don't remember the size of the retracement on the slide, but it was very far away from the prior low. Yeah, so that was a big move off of the low, and then it was very far away. And so the W bottom is defined by an advance from the prior low that's relatively small. And then it comes back down again. Remember the psychology definition that I shared with you.
Same, but different. This one we did, I remember the Bitcoin miners and Bitcoin, they all gave us amazing entries at the same time where we ripped on these things. So we gave this as a directional also, but this is to show you when we have bullish patterns, we can either buy liquid options as a directional trade because we like options for the leverage and limited risk, or when we see potent turns, which that's exactly what we're talking about today, right? Potent turns is a W bottom. We believe that that level is going to hold. So we go to the option table, we look at the strikes where we think is going to hold by expiration, and we can either sell that put naked. In this case, we did a little $2 wide put spread, took in 30 cents, large W bottom at the 200 MA. Closed it at 2 cents just to take our money and run. But you see, when you sell options, your max gain is whatever credit you take in. That's why things like this, we do put spreads plus do a directional. Let's actually start with the monthly here. This is just to give you an example of a longer term trade. This was, I don't know if this was an ETF, but it doesn't matter. But when we hold things longer, all it means is multiple time frames are in alignment. That suggests that this thing is set up for a big move. So typically I start small and go large, but because of today's subject, let's start big and then go down. So is this a W bottom based on what you've learned? Little Johnny. Of course it is. I got a bottoming tail retest, potent bar, price void. Of course it is. I'm not trading the monthly, but that supports a big move higher. The weekly chart, big sloppy bottom, new low reversal. This is what we call a little bear sandwich, a continuation. That's a bullish move up. And then I got a bullish 1, 2, 3 continuation. That's bullish. Here's my daily chart. I got rising 20, rising 50, igniting bar. Pretty much, let's just call them 3 inside bars. Now I have a closing breakout. This is a great example of multiple time frames are in alignment for an expected big move. We would just buy into the close right here, stop under the wide range bar, and depending on your management methodology, is how you're going to manage that thing. Yes.
And answer BB's question, because I'm not the option guy here.
Yeah, definitely.
Cash secured puts.
Yeah. Just they're both naked puts. We're selling a naked put and we're taking in money and we have the obligation to buy the underlying on or before expiration. There's a complicated formula of how much buying power a naked put takes. You can Google it, but as a rough rule of thumb, it's like 20% of the strike price as a rule of thumb I use. Now, if it's cash secured, which you can do in your IRA, I do it all the time. It just means that you have to have enough cash in your account that if you're assigned, you can pay 100% of that stock value. That's all. All right, here's my W bottom. I'm going to show
Let
you.
me answer this question.
Sure.
That as we define a W bottom, by definition, there's going to be a void. Because the beginning of it is preceded by a momentum move down.
And void is also a factor, frankly, on our very first slide, talking about the pattern with a void. Yes. All right, so W bottom here on the monthly chart, major support. I got 2 slides here. Weekly chart. So this is similar, I guess, to the other one I just went over with multiple time frames. Wide range breakout here. And look at my daily chart. Now, could I swing this just as a swing trade, as a multi-week turn at the 50 with a closing breakout and a 1, 2, 3? Absolutely. So it's totally up to you if you say, wow, look at the weekly and monthly are fantastic entries too. I might swing half and hold half for a longer term trade. These are different, but this is like an example that Greg absolutely loves. Day trading spiders and index ETFs or anything for that matter. So we're in a downtrend, big momentum move down. It's going sideways, breaks the lows. We have no idea, at least in isolation, without looking at bigger time frames, without looking at market internals, intraday market internals, of whether this is going to happen. But I hear Greg saying all the time for day trading, let's see if this new low snaps right back. It's exactly what it did. Close with a range expansion bar. That's a beautiful time to enter this. Now, we also look for this on the W bottoms. We look for these new low rejections on, when we're looking for the W retest. That's why we call it a new low plus. So, we're covering so much, Greg, as we always do. But this is not a W bottom on the spiders, okay? But I'm showing you the double bottom on 15-minute General Motors at the 2 p.m. 2:30 reversal period. Momentum moved down, went up. I'm waiting for my retest, which I may never get, right? Because it's in a downtrend. The assumption for many is this is going to keep going lower. But we are monitoring, Greg and I both use our own 6-screen setups. I'm totally monitoring the index ETFs, other things all the time. So if I were to see this happen, this breakdown failure at 2:30 reversal period, I'm now looking for day trade longs. There's my double bottom on General Motors. This one's sloppier, but it's the same concept. Big momentum move down. This was an ETF, went up. So where to enter? I like to keep emphasizing this because red bar, green bar, green bar. Would I enter over the high of this green bar myself? No, because I'm not confident of this mess. But now that it gapped up and took out this red bar, that is my tell. Remember the poker traders? When am I confident of this turn? And in this example, it's over the red bar.
I'll point out for them, Dan, to define why you wouldn't be confident necessarily on that is because
Resistance. Look at, draw a horizontal line right here.
right. Well, let's look at it both ways. Those bars overlapping each other created a base intraday. And that was been able to break out. So it went up into the gap. This created a base intraday. That doesn't mean on a retest pattern like this, if you took it above here, it can't get through it because it can. We just really don't know whether similar patterns, one will get through and one don't. That's more defined by the market environment and multiple time frames. But depending on how the turn happened, we could be much more confident in that. And by that, what I mean is, if I was to, instead of having this bar, if the bar was like this, and how confident can I be on this pattern? Well, I would be confident to buy it above that bar because it gapped down and it went deep into the congestion.
Yep.
And I'd put a stop down here. I'd share size my position for that, money management. Now, could I become more confident? Yeah, could be that 1, 2, 3 pattern that we often talk about.
Perfect.
So as you begin to learn, master trader strategies and method and bar by bar analysis, we can call it whatever we want. You can call it a flying Johnny. Right? It doesn't matter. You can make up your own marketing names. The thing is, as you learn this, you understand what's going on, regardless of what you call it. Like some of the times you say, call it what you want, it's going to go up. So we try to simplify things so you don't get what I like to say, brain damage.
So same here. When am I confident? And I purposely show you some sloppy ones too, but it's the same concept. Momentum moved down, went up. Am I going to get a turn? I don't know. Red bar sure as heck looked like it was going to make a new low. Now I have a 180 reversal. I would buy that over the high, but it gapped up and we had a beautiful 3-day pop. We're not marrying these stocks. They're counter trend moves that we're trading into the void that are high probability. This isn't similar to the other bigger time frames. Same. So would I have bought over, I just want to drill this because it's an important part. I think you all by now can visualize with 8-year-old little Johnny what a W is. Here's my momentum move, went up, and I'm waiting for a retest. This one little tiny bar, I'm not confident. But you know what? Now I am. I don't know if I buy this one because of this mess, but this would be a good candidate to sell an out of the money put. Same question I've been asking. Where are you confident to enter this thing? My answer is, I don't know yet. So same concept. There's no potent turn yet. And so remember what Greg said, gap reversal, 1, 2, 3. Wide range. I need something. Otherwise, it's in a downtrend, and the assumption is it's going to keep going lower. W bottom over the high of this red bar is where I'm confident. 15-minute chart. I remember this. This was actually Facebook in the days. It had some bad news here. So when I see things like that, I put them in a 5-minute window or 15, and I say, I will be trading you sometime. I don't know. I'll tell you when I see it. So now I have a climactic buy setup, two bottoming tails, went up, came down. Same question, folks. Would I buy over the high of this first red bar? No, it's not a potent turn. Is that a potent turn? No. What about now? I have a range expansion green bar with 4 bars on support. Now I'm good to go. Buy over the high of this green bar, stop under the low. I sure hope you all are getting excited about how much you're learning in a short time frame and how wonderful these are. Monthly chart, momentum move, sloppy attempt to get off the ground, new low plus, made a new low, snapped right back, came in. I'm buying over the high of this little red bar right here. See? Void. This thing, my target might be 10 bucks. I don't know. I don't know. I don't know what my target is. I have a monster void. This was back in the COVID days, but this chart is great for this subject. Look, every one of these are W bottoms. They got creamed. So same subject. Which one do I have the most confidence of this turn on the right side? See that? Same with that. All right, so this one is not a W bottom, so I just want to differentiate. And the only reason why is because it didn't go up to give my third in a retest, but it's a powerful pattern. I just wanted to differentiate it. So I have my big momentum move down. I have a gap engulfing reversal bar. 2-bar retracement. I don't know what this thing's going to do on the close of this red bar. I don't know. I need more information. 180 reversal. Consolidating, top of the range, price void. Multi-bar turn at the 50. Now, I am extremely confident over the high of this bar that it's going higher. Doesn't mean it can't gap down to 80. We have an 85% batting average. Anybody who tells you they have 100, you should hold your wallet and run. So this one, we not only bought the stock, we did a put spread similar to what we've talked about on some other examples.
And 1 second, Lawrence said, but these are still not all trades that would be considered counter trend. Most of them are. Right. Most of them that we've showed are. They are counter trend because they went down sharply.
Right.
They went downtrends. So they're counter trend and they're tradable based on the W pattern. Right. How many will go on to a stage 2, meaning an uptrend? I don't know, and I don't care. It's a short-term trade. I don't know. I wouldn't be able to tell you. I'm not going to be in it by the time it gets to a stage 2. Because that would take too much of a pullback and higher low and higher high. And if it can ever get there, we'll find it.
All right, so in my option course, this is in the advanced credit spread course, we're technical traders. I've already given you examples of this, but these are all flavors of bullish turns. Well, guess what, folks? You've just mastered this one in 45 minutes. So once I'm confident of the turn, I'm going to sell it out of the money put. You know, I have a whole checklist, so don't do it blindly. Email me if you want. I'll email you my credit spread checklist of selling puts. If you do it naked, that's fine. You can buy it further out of the money put. That's what's called a bull put credit spread. We absolutely love these. Last example, another day trade. Daily chart, gap reversal. We used the 15-minute chart of the to get on board this. These dotted lines are pre-market. So here's my sell-off. This is the market open now, went up a little bit. And I use the if they're liquid, I use the pre-market pattern as if the day were open. So here's my W bottom on my 15-minute chart that I use to get into the swing trade. Would you have used it to just day trade this? Absolutely. All right, here's Greg's swing trading course. I think he gave you the link. Amazing course, puts together all those thought building lessons that we started with, helps you. I mean, all the information's there for you to objectively interpret price action of anything that moves on any time frame. And he has the trader psychology, risk management in there. Whether you're new to trading or been trading 20 years, this is an amazing course. All right, let's look at real charts. For the remaining time, we can answer questions. Greg will pull up his TC.
Add to that, Dan, was that I got ill last night, so I didn't have time to look into getting it made. But if you're interested in the swing trading course, what I was going to put together was the swing and a gap course where you could get 2 for 1. So watch for the recording. We can put a link in there for that.
Oh, awesome.
I can make it. We could make it 2 for 1 for mastering credit spreads in the swing course. You know, as long as anything, you could email Dan and I, and we can say whatever course, 2 courses you want, we can get that made. So keep that in mind. But I'd have to know what you want.
All right, awesome.
All right.
And as I said earlier, folks, the 15-minute, here, I'll type it out. The 15-minute M top was the high of the day so far. So what you've just learned, we were selling into strength and starting to look for shorts. So Qs, spiders, diamonds, all 15-minute M tops at, what was that, 11, 11:15 or whatever. Eyeball.
All right. So Florence had typed in MGM. I'm not sure what she was thinking because it's not a W bottom. However, there's a lot of patterns like this that have the beginnings of a W bottom. We don't know if they're going to set up. So this collapsed. And right now it's a shallow retracement, and it may come down and retest this and form one of the setups that we viewed. We need to see. And there's a lot of these. Look at
all over the place.
That collapsed. That could go down and make a retest. Not exactly the same that we showed, but it collapsed and made a retest. Spiders. We're getting a red day today that may go down and may tag. Well, it would have to go too far down if it tagged the 200 MA, but that could go down and violate the prior low and become a W bottom. Certainly the Qs. SMH. Right, that going down for a while. It had that exhaustion gap that created the big wide range bar. That created the big wide range bar, and notice it's in an area of support. So one of the things to look for when you see something come down in a climactic way, or which could be a gap, and there's a reversal, look to the left. It's on a support area. That's where buyers are going to be. Now they're selling even before the coming up into this area right there at the bottom of that bar, and back down it went. So that was showing some relative weakness versus spiders, which went down there and punctured into that bar over there on the same day. So we could look through here, and what I did was I sorted this by stocks that are below their 200 MA, thinking, all right, at least these have been going down for a while, and you got to start looking. There's a lot of messy charts. You can see all of these are like terribly messy. That, a little better than what we saw. It could go down there and retest. You know, far from the W, but it collapsed. Just there's a lot of charts right now that are not attractive in any way whatsoever from a swing trading perspective.
All right.
Well, that's the Russell, but we could look at, well, you know what? Let's look at SMHs, since that was one of the better ones, and that me typing this in, it'll load the charts in that particular ETF. And so if the index looks that way, some of the stocks might look that way. Like that one. That. So we're going to find more of those here that collapsed. That's not getting off of the mat, but that's definitely got a void and collapsed. So you see, this has little to no retracement. So we want to see somewhat of a retracement. So from this bar, say if it gotten above the topping tail bar and it retraced up, I don't know, let's say from here to here, let's just call it around 40%. And it came up around $31, 31 and change, give or take, that unfilled gap right here. It came up in there and then came down and did a retest and a turn. So we're not going to get these tomorrow. We're not going to get them Friday. We're going to get them sometime next week.
Right.
So next week, well, maybe like tomorrow, there's a bunch of economic numbers, and everybody's hung up on these numbers for the longest time, because now, but after Friday, of course, do we get confirming numbers to Friday that the Fed is behind the curve again, right? And sends things back down, and maybe the Fed gets motivated to get off their probably $10,000 chair that we paid for, our tax money, that they could have bought for 500, and they lower interest rates. So I'm just pressing the space bar on this. Look, MU is collapsed, and look how far down this has gone in a short amount of time. So it's already down 70% from the time we issued a sell signal based on market internals.
Wow.
Now, the market's not down 70%, but
Wow.
one of the things I say every single time, whether it's a 5% correction or a 10% correction, there are things that are going to get crushed.
Wow.
70%. Institutions were in love with this thing. And I've seen over the years, they just come back, they get divorced, they fall in love again, they get divorced, but this one usually gets decimated. I don't know why. Then they come back for it again. This is another one. They love it, and then they hate it. Yep. That's annualized. So that was wrong. This is down 35, 36%. Let's go back to MU so I can give you the right number, because that was an annualized. This is down. Okay. It's only down 45%. How do you like to lose 50% of your money?
Mm-hmm.
Because you didn't apply any money management. You didn't adhere to your stop. How would you like to go home and tell your better half you lost half the money? That should motivate you to learn something. Collapse. Could be a W bottom. Right? This one did not retrace. So this looks more like a continuation pattern. Right? So if we can find one that retraced, I retraced a little bit, really not enough, but QCOM only down 34%. It showed relative strength to the one that was down 45%.
And
But do you want to own the one that went down 34% without a W bottom? I think that would be foolish. Right. All right. Let's look at financials for a moment. We got a few minutes here. All right. So this is a bit different in that it was showing such strength, and then the retest, and then it collapses. This is not normal. This was a shock.
I know, but today's subject, that's an M top.
Absolutely. Thank you, Dan. You're right. You're right. Where it became climactic on the way up, a very potent reversal, and then a retest and a very potent reversal. And we could sort this by stock, say, that are above their 50 MA. I could even show, I could put a column in here that says, show me stocks that are X percent. I could just put show me percent from a 50 MA in a column and then sort it by the ones that are the most extended. That would be one way of looking for setups. There's just so many different things you can do with the platform. There's forming a sell setup, Goldman Sachs, hit the 20 MA there and pulled in. And so we can look at intraday charts. So a lot of intraday charts versus the daily charts are out of sync here, because the daily charts are into areas of resistance where they should form sell setups and then maybe W bottoms, but the intraday charts are they're not bearish yet. Look at the 65-minute, that hasn't broken down yet. Easier to see them all, but as I said, it applies to all time frames. Here's a little breakout failure shock pattern you can pay attention to. If it was a daily chart, that would, especially with the little rounding right shoulder there, much more, powerful on a higher time frame. But you see this pattern on daily time frames too. That looks like a continuation lower. Financials, that's not good. Could barely retrace it. It couldn't go up here and even touch that bar's low. This is showing relative strength. So this is one, if it doesn't break below these lows, it's got this junk here, but you know what? I don't care about this over here anymore. It's going sideways. And this is not a double top. Here's an example. It's not an M top. It's too far away. So it came all the way down and it retraced. Right? That retracement's 100%, give or take. I'm not getting my protractor out to say it's, 98.468, but so far we're getting the beginnings of a red bar ignored. So what I want to do is set an alert above that high. Not a month. I think a week should be plenty. And let's see if that continues, that it goes higher. So, just looking through others, bank, this looks like it could go lower. So this was a stronger sector. I know I'm going through these fast, but you get the idea of what we're looking for, and so we can sort this by what's doing well on the day, what's doing well on the week. As far as this week goes, sure looks like an awful lot of red there. There's one sector that's up on the week here, real estate. And if we go to a bigger list of ETFs, and this is sorted by what's up on the week. So telecom is up. Well, that came roaring back. Maybe TMUS did. TBT. So that looks like it's going to go down and could form a W bottom. This is interest rates. Semiconductors we looked at. MJ, forget that. And so on. So there's a lot of patterns here that we could get retests, and there are some that look like they're going to form continuation patterns like this, because this should have never happened. It should have never happened. And so that's the whole idea behind a shock. And the news coming out, and now that economic news supporting a recession, which everybody believed in. How many times have you heard the consumer's strong, it's going to be a soft landing? And now these numbers come out and it's like, oh my God, soft landing? We might crash. And there was this reaction that you know what happened. So the psychology behind the pattern, learn the patterns, take master trader technical strategies, money management. Have a great day. Bye-bye.
To Master Trader Live. If you like the show, why don't you share this video with your family? You can do it to marketplace. Educated with our friends in the way. A week assess for lesson set right here in box. Love. Subscribe to the channel and press the bell to get alerts. Enjoy the event. Give us a thumbs up. Visit mastertrader.com. That's mastertrader.com.